Good morning all, CamelbackTrading.org coming to you this Thursday morning, January 6th. We are looking at Window Traders Market Profile of SPY, IWM, and Triple Qs. And after the market took a deep dive yesterday afternoon, as you can see, we've been piling in at the lows of yesterday and below. So whoever was selling this, remember we had about 8 days on the water, so we still have longs getting out. Shorts piling in. We have a very wide POC, although I'll have to look. I'm in 8s here in SPY when I go later to 1s. But the bottom line is this market is still being controlled by sellers. When we look at the charts, we'll show you where the danger starts lying. For the bulls, the lower we go. As far as overnight destinations, right now the upside is 469.46. The downside is 466.14. If we gap lower, then yesterday's low of 468.28 would be an upside destination. Right now, with 75 minutes to go, both us and Russell, we're right at yesterday's low. Russell is inside of it. Qs are the ones looking lower, right? That's been the theme with the tech stocks getting hit. So game plan for this morning. Well, again, you can certainly get an inventory adjustment since the short time is obviously short, right? The shorts that piled in. So we'll see if we get any kind of an inventory adjustment right off the bat. If we do, I will be looking for shorts. There's numerous places you can look at them. First of all, we're all going to be starting with lower value. So that's going to be in the seller's corner right off the bat. So depending on if we gap, how big the gap is, you can take a short. If there is no gap, you can certainly take a short the first time against L's low, is where we probed from. Then it depends how much heat you want to take. Right, the first set of single prints don't start till L's high. I don't think you want to be in there for almost $2. So any acceptance into L, I'd get out of that short and then try again at around L's high, where the first set of single prints are and where value low is, right? If buyers start getting this from a lower value to overlap into lower or unchanged, well, then there's a little bit of a different story, and sellers aren't as strong as you would think. If the sellers are that strong, we should attempt to keep value lower all day. All right, it's the same play in all these indices, right? You could take shorts against the price probes or somewhere inside their single prints and value low. As far as a call play, again, you might get an inventory adjustment initially. So if we open, push down below the opening, and then get above it, you might want to take a long as we get above the opening to see if we push up towards L's low. Because again, that's a pretty good, decent move. M's low is 468.28. L's low isn't until 469.95. So you could get somewhat of a push up to test the price probe. Again, though, I'd have a short leash on it. If you get above the opening, wherever we open, I would put a stop right below the opening, because it could certainly be a head fake where they push up, reverse, and then continue down. So that's one possible call play. You will be meeting a lot of different levels as we go down, right? But not for a while. We don't have anything besides our overnight low until the price probe of 466.91 from December 22nd. Something to certainly keep in mind. Then we get into where the 50-day moving average, then 50-day moving average is at 465.86 right now. So you still have other levels. The ones that I gave you yesterday, the 9 wide from the 22nd, and then you get to the 50 above where the first set of single prints start from December 22nd. Again, if you are to push back to those levels, those would be visual buys the first time to see if you get a responsive bounce. If we're dealing with short-term players, you should get responsive bounces at those levels. But if the big boys start coming in, they will not care about them. So it remains to be seen who will be dictating this market. So those are early plays, and that goes for all three of these indices, although I'm not sure exactly. The Russell's below all those indices, the 50, 20, and 200. I'm not sure what Triple Q's 200 is right now. So that's something you could look to see if it would get there as a responsive play. Again, you'll be getting this live in the trading room as we're going in all three of these indices if you join CamelbackTrading.org. And then on the chart, so what's the danger here for bulls? Well, right now, I'm calling this a 2-month balance. I'm sorry, I'm losing my mind. The monthly for now is, we had an outside month up, and I was calling it up. Nothing changes till we take out last month's low for the most part. Well, last month's low is into 448.92. So that's one thing to keep in mind. So in the shorter time, in the intermediate time frame, here's where our worry is. If we don't make much more of a low this week, I'd keep it a 2-week balance. But the lower we go and the more acceptance you get into these 4 weeks, well then obviously the destination is the bottom of them, which is first 451.14 and then the monthly low of 448.92. That's a pretty bad scenario for the bulls to start the year if we start getting acceptance into this balance. Tomorrow night will be important to see if we close below the 472.01 level. If you do, you have an outside week down, and then the odds of going to the bottom of this balance get better. And on the daily, if we take out today's low, the daily is officially down for me, and then after those couple levels, you'll be testing the 50-day moving average. Good luck trading today. Have a great day, and we'll recap at 4 p.m.